And Jeff, deGraaf, why don't we just start right there in terms of, I know you've been on this idea that maybe the pure kind of high beta, fastest moving stocks in the market have kind of done what they're going to do for you for a while. How are you reading that?
Yeah, look, I mean, you're in the 100th percentile of performance of high beta over the last 3 months. That's actually now in the 4th month. And this is usually the time where it starts to transition, where just volatility or beta is not enough. You need something else there as well. And our preference is for momentum. And really what that means is stocks that are not just volatile, but stocks that have had really a good return per unit of risk as we've gone along. And I was just looking at that list, and I'd say about half of those qualify as momentum names and beta names, but the other half are just pure beta, and that's where it gets a little uncomfortable for us, because beta did exactly what it should do off of a low, and that was obviously in the early part of April. But it usually lasts about three-ish months, and we're right in that zone. And if you look historically, even from just the calendar's perspective, we just happen to be at a point where beta tends to underperform going into August and particularly in September, and then starts to kick back in the 4th quarter. But I think beta by itself right here is a little overdone and frankly, one of the more vulnerable areas of the market.
Yeah, we'll see if the market can maybe execute one of these on-the-fly rotations from one characteristic to another. It's done that in the past. I wonder what you're looking at, though, in terms of, just the general readings you're getting out of the market behavior. We were having a discussion at the top of the hour about, can we give this market credit for being broad enough, not broad enough? What would you like to see work from here?
Well, first things first, I mean, the equal weight S&P 500 made a new high, so that's important. I think that really should dampen, some of the concerns that people have about the narrowness of the market. If the equal weight's making a new high along with the cap weight, that's probably good enough. What we like to do from here is really study how many names are making 52-week highs, what's the composition of that. And that's not enough to make a bull or bear call on it, but it's really more nuanced, where it allows us to understand if this is more momentum oriented, which if that's the case, we want to buy strength, we want to chase strength. If it's not momentum oriented, in other words, if those 52-week highs aren't expanding, then we want to wait for pullbacks and buy consolidation. So right now I'd say we're still in the camp of buying strength, but we need to see 52-week highs continue to percolate and to grow. Our kind of magic number is about 20% of the equal weight S&P on any given day. The last reading we had is 10. Now, we just made a new high last week, so it's not an exact science by any means. But I'd say in the next couple of weeks, we'd want to see that number up above 20%, just to give us that reassurance that this is in fact not only a trending market, but a market that does have internal momentum to it, broad enough.
And just real quick, Jeff, just in 30 seconds, what do we make of the fact that we are on the precipice of a tough seasonal period? How should we incorporate that into our tactics?
It's a great question, Mike. It's something that we look at as icing on the cake, or lack of icing. It's kind of a sweetener, if you will. We certainly don't make market calls based only on seasonals. If the market were set up more bearishly, then we'd be concerned about the seasonal strength, which is actually weakness for the next 3 months as we look at it. In fact, this week we're standing on a 3-month forward basis. We're standing at the weakest part of the market. So, something that we keep in mind. But I think this market's strong enough that this is probably going to be more of a consolidation than a meaningful drawdown, with the exception of beta. I do think beta is more vulnerable than that, but I think the market overall is.